Great Lakes region. So I'm sure some of you on the call get to work with Brad on a daily basis. We are lucky to have him today. I think he's a really valuable member of our team, and particularly the way he kind of breaks down concepts really to an understanding on a client level. And I think he does a great job of that understanding, has a broad range of roles that he's played within the financial services industry. So we're really excited to have him today. Also, we have Lena Storm. Those of you that have joined us for some trainings in the past have probably seen her run point on some of our advanced sales concepts. She's also one of the key members of our team that created a program called Design Hub. I'm sure she'll talk about that during the presentation, but she's a resource that we lean on, particularly for advanced sales concepts, as well as her expertise, particularly within our new platform that we have, Design Hub. So really, really excited about that. Just some quick housekeeping things before we get started. I mentioned this before to some of the early people that attended. From a background noise standpoint, all of our attendees are on mute. That just keeps the background noise down so everyone can hear. If you would like to ask a question, please use the Q&A feature. Send that question to us. If we have time at the end, we'll address those questions. If you have a question that we can't get to, we'll go ahead and email you an answer after the presentation's over. Also, we are recording this session. So one, for those in attendance, you don't need to jot down every single piece of information that's on the presentation. You'll have a copy of both the presentation as well as a recording. So go ahead and just focus on kind of the information that Brad and Lena are providing on this, and we'll make sure that we get you all that follow-up material in the terms of the presentation and the recording. And also, if you had someone in your office that wasn't able to join us today, that recording, they can watch and listen to that at their own leisure. So with that, I'm going to set the floor for Brad and Lena.
Thank you, Kyle, and thank each and every one of you for joining Lena and I today to talk about the CARES Act legislation and the stimulus package that has been released and communicated out at this point in time, as well as what is potentially out there, as well as there's a lot of, I would say, velocity around what legislation's happening and has happened. And one of the great things about being here at Global Atlantic is our advanced resource team that we have. When this COVID-19 hit originally, there was a lot of questions, a lot of concerns of how it's going to impact the life insurance business as well as all aspects of our lives. And one of the greatest resources and tools we had, and was made available almost immediately the day of the CARE Act being signed into effect, was having information that was broken down for our agents, our advisors, our distribution partners to be able to share and speak to how this is going to impact business owners, how this is going to impact individuals, and how and how can we communicate that and answer those questions efficiently, as there has been a lot of uncertainty. And so at the end of the call today, definitely we have a quick concepts piece that our advanced markets team has put together, kind of broken down each of these items that Lena is going to talk about today. And if you haven't seen that, please ask your distribution partner or give us a call at Global Atlantic and we can get that piece over to you. So without further ado, we will turn this over to Lena, who's been an excellent resource around this topic, around what does the next phase of it look like, and then secondarily, how can it positively impact different individuals and business partners out in the field in working through these solutions. So with that being said, Lena, I will turn it over to you and take it away.
Thank you so much, Brad. Welcome, everyone. Good afternoon. Thanks for joining. As Brad and Kyle mentioned, I'm going to do a review of what we call the stimulus package, or the coronavirus stimulus package today. I want to just say at the upfront that there are a lot of things that have happened in the stimulus legislation that was passed some time ago in the three and a half versions of it that have been passed. And so bear in mind that there is a continual process of changes made by the Department of Treasury and the IRS as people find more issues with the different aspects of the legislation. So what we're doing today is trying to just give you an overview of the provisions that exist today, what it looks like that's coming down the pike, but understand that a lot of those things are have issues and that the holes will be plugged, I'm sure. So just to start off with, the stimulus package basically has a few component parts. One is relief for taxpayers and employees, relief for businesses, and relief for industries. And so the point of the legislation is, what do we need to do to protect employees, businesses, and industries during this period of downtime in our economy and during this period of the virus in which people are getting sick. And so in addition to that, over time, we've received supplemental legislation on the CARES Act that was passed in May, and that was considered round 3.5. And round 3.5 that was passed actually increased the funding for the loan program under the original CARES Act called PPP, and also the SBA EIDL program, which is also a loan program that is part of the act, and also allocated funds to smaller banks in this go-around to help minority-owned businesses that weren't helped in the first go-around. It also added some funding for hospitals and healthcare workers and testing of COVID-19. And so the additional legislation that's being debated right now, which is considered round 4, has to do with this act you may have heard about that was passed by the House recently, about a week ago, called the HEROES Act. And basically that's just money for testing and contact tracing. It's about $3 trillion. The Democrats have pushed for that. There's additional direct payments to individuals, which we're going to talk about generally in all of the legislation that they want to add, but and the Democrats and the Republicans are on point with that. They both agree. But the Democrats want to also extend unemployment compensation benefits all the way through to January 1st, and the Republicans absolutely said no to that. The Republicans are totally on board with plugging up some holes with the loan program from the original 2 installments of the legislation. So I'm going to go through that legislation now at a very high level, but these are some of the things that are happening as we speak. So in terms of relief for taxpayers and employees, there's paid sick and family leave for people who are affected by the virus itself. I'll talk about the funding in a few minutes, but basically what the legislation says is this, is that sick leave needs to be provided for by companies to cover wages plus healthcare costs up to $511 per day for 10 days for anyone who comes down and contracts the disease. There's also legislation that was passed that allows for family leave. So if there is a family member who needs to leave work in order to take care of someone who's sick from coronavirus, they get to receive up to a maximum of $200 per day, up to $10,000 max. So the legislation tries to protect taxpayers and employees by saying, go and take care of yourself and your family due to this virus, and this is what we're going to give you, and we will make sure that employers fund this for you. The second thing that the legislation does is provide stimulus checks to certain people in order to keep the economy going and spending going. These stimulus checks are really a new 2020 tax credit just for coronavirus, but they're giving it to you early. I'll explain that in a second. But essentially, it is a check for $1,200 for single taxpayers and $2,400 for those who are married filing jointly. For single, that includes also head of household. In addition to this one-time check, the legislation allows for $500 to also be paid to these families per child. However, these checks are based on your maximum adjusted gross income. So if you're a single and you make up to $75,000, or you're a head of household and you make up to $112,500, or you're married filing jointly and you make up to $150,000, you get that full check. As a single, $1,200. As a married filing jointly, it's $2,400, in addition to the $500 per child. However, if you make more than those amounts that I just stated, then there's a phase out of that check amount every $50 for $1,000. I'm sorry, $50 for every $1,000 earned. If you have no kids, however, the adjusted gross income is capped at $99,000 for single and $198,000 married filing jointly. So you are not going to get a $1,200 or $2,400 check if you make more than $99,000 or $198,000 if you're married and you have no kids. So that's the other stipulation. Now, how does this reconcile itself? Well, they're going to figure out, for the AGI purposes, whether you should get the $1,200 or $2,400 and the $500 per child based on your 2018 or 2019 return. Now, some people haven't filed their 2019 return because those returns have been extended, which we'll talk about in a second, at the filing date. So if the last tax return you filed was in 2018, then what'll happen is on your 2020, they're going to determine what your check should be based on your 2018 AGI. However, when you go to file your 2020 tax return, that $1,200 and $2,400 will be reconciled as a tax credit. So they're going to ask you on the new 2020 tax return, whether you got anything already, how much was it, and then they're going to look at your AGI for 2020, and they're going to make sure that if you didn't get enough or you didn't get anything because of your 2018 or 2019 return, and you should have gotten something, then they will reconcile it at that time. If you got a check and you got too much and you should have never gotten it, then they will not take that money back. They're going to just let it go. That's just to make things easier. But if you didn't get enough or you didn't get a check and you do your 2020 return and they reconcile it and they see that you should have gotten it, they will allow you to use it as a credit on your tax return. So that's the bottom line. The other thing is, some people, when this came out, were concerned because there are some recipients of Social Security who don't file tax returns. So how are they going to be able to get a check? So in order to deal with that, they said that they will look at the Social Security 1099 forms as well as the tax returns for 2018 or 2019 to determine if there are Social Security recipients who should have received a check. Now, a lot of people have not received their checks yet. It's taken a long time even now, but they are still coming. The other thing that the legislation has provided for was an extension of the tax filing and the payment of taxes due to July 15th of 2020. So anybody who didn't file their tax return by April 15th must file it by July 15th. Because of the coronavirus, they extended that period. If you owed taxes on your 2019 return, that also was extended to July 15th of 2020. However, the maximum deferral of the taxes you owed that you can defer to July is $1 million for individuals and $10 million for C corporations. So if you owe taxes in 2019, you haven't filed because you're extending, but you did owe taxes, and the amount you owed is more than $1 million as an individual, or $1 million or more, or $10 million as a C corporation, then you don't get to extend that filing. So if you have clients who didn't file because they think they have to July, then they are in the wrong and they will be subject to penalties on not having paid that taxes. Now, relief for taxpayers continuing regarding unemployment compensation insurance. Well, unemployment is paid at the state level, and every state offers their own benefits. There are some states that have much more robust benefits and others that are minimal benefits. So what happened is, through this legislation, the government said, listen, we are going to increase the amount of unemployment compensation that is provided by the states, a flat $600 per week. if you apply for unemployment between March 27th and July 31st. And the reason we're going to do that is to provide parity between the states, because some states' unemployment insurance hasn't been updated in up to years, and so people will get hurt. By increasing a flat $600 per week, yeah, we're giving more to certain people in certain states that have more robust unemployment, but this is just a way to just a wide net to try to help as many people as possible. They also, the government said through this stimulus packages, we're going to extend whatever state benefits are for 13 weeks, total weeks, so that the total weeks of unemployment insurance is 39 weeks if you apply between March 27th and July 31st. And so that the legislation was trying to help people get through this period. Also, a state's waiting period would be waived where there was one as well. And so the government was going to fund that through this legislation. So these unemployment benefits on the surface are extremely robust and extremely attractive to certain people who were laid off, furloughed, et cetera, and have also at the same time caused a lot of issues because they conflict with some other aspects of the legislation which has been on the news. We're going to talk about that in a minute. Let me just finish some of the other relief provisions in the relative to taxpayers. The federal student loan payments are suspended through September 30th of 2020. So if you have a student loan, and it's a federal student loan, not a state-sponsored student loan or a private loan through a bank, but if you have a federal student loan, they are suspending any requirements for payments until September. They will resume payments in October, and they will not retroactively say you owe all of that prior in a lump sum. They're just resuming the payment. So what they did systematically is the federal loan program put a 0% loan interest in the system, so nothing is owed until October. So that's an important aspect of the legislation. Also, and this is probably very relevant to some of the clients when you're speaking to your own clients, in order to help people get through this difficult period who may have lost their job or are sick and are having financial difficulties, the legislation allows people, and this really shouldn't be done unless you absolutely need it, but it allows you to take distributions from a qualified plan or an IRA up to $100,000 tax-free and penalty-free. And you can take that through 12/31/2020. So if you need that money, you can take a tax-free and penalty-free distribution. It doesn't matter how old you are, assuming you have the funds in there. You can pay back the $100,000 or up to whatever you took out within 3 years as a qualified rollover. No one will ask questions. Or pay taxes over a 3-year period on what you took out if you don't intend to put it back into your qualified plan or IRA. Self-certification is all that's needed. So there may be some plans that give you paperwork that says, do you need this for coronavirus? And you'd say yes, so that's self-certification. You may be able to, some of your plan sponsors, you may be able to call them and say, I'm self-certifying that I have an issue with coronavirus and I want to take $50,000 or $100,000 out right now on a tax-free, penalty-free basis, and they have to do that. Now, the thing that's important to understand is that fees charged by an underlying investment in your IRA, for example, those are not waived. So although you can take $100,000 up to a max of $100,000 tax-free and penalty-free out of your IRA, you may have fees associated, like, for example, a variable annuity, surrender charges. You may have fees, and those are not waived. So be careful. It's important to let your clients know that if they're in an IRA that's funded in something like an annuity, for example, that has surrender charge period, or any other type of investment, that is not waived. They're going to be subject to those charges. And importantly, very importantly, because I did not pick up on this until sometime later, plan sponsors do not, for 401ks, do not have to opt into this program. They may not be able to administer it. So you may call or a client may call 401k plan sponsor and say, I want to take 50,000 out, I need it, I have this issue. And the plan sponsor says, well, I know that you're allowed to through legislation, but we don't participate in that program. And they have every right to do that. The reason they have the right, there's a provision from Katrina legislation way back that said, that allowed plan sponsors to have that option. And in the legislation for the stimulus, the coronavirus stimulus, they refer to that legislation. And that's why plan sponsors also have that option to not participate in this program. So that's important. The other thing that the legislation allows are loans from a qualified plan. You cannot, by the way, take loans from an IRA ever, so that is not part of this. However, you can take up to $100,000 maximum loan from a qualified plan. Loans must be repaid to the plan by year 5, which is a typical loan provision in qualified plans anyway. And the loan interest, which is the typical loan interest, is 4% on those loans. However, the loan interest and payments can be deferred for 1 year from the time that you take it. Now, if you have an existing loan, you can also defer the loan interest and payments on that existing loan from your qualified plan. Again, a plan sponsor does not necessarily have to participate in this program where it allows you to take a loan, so be aware of that. The other thing that that's relief in terms of qualified plans is that the required minimum distribution for people who take required minimum distributions right now, and for people who are age 72 or older, some of you may know that the Secure Act, which was effective in January 1st of 2020, before the coronavirus issue, increased the age at which required minimum distributions needed to be taken, and that is age 72 now. So if someone is already taking required minimum distributions, and now in 2020 they need to take it, they can skip it completely and there's no penalty and just start with required minimum distributions in 2021. If you are turning age 72, which is the required minimum distribution date, in 2020, you can actually take your first required minimum distribution by April 15th of 2021. You do not need to take it in 2020. So what they're trying to do is, a lot of the market value at this time when the legislation was passed, although things have changed significantly, market values went down significantly, and they were trying to minimize the impact of having to take a required minimum distribution when the market was down. So it's up now, but that provision is still in place. Now, relief for businesses. There's 2 loan programs, and one of the loan programs is the Payroll Protection Program known as PPP. You will have seen it everywhere in the news. PPP allows businesses with less than 500 employees generally to take a loan. It applies to sole proprietors and self-employed people. The loans you can take are up to $10 million from a federally insured bank or credit union. And each bank is allotted a certain amount. So it was first come, first served. And the intended purpose of this loan is to say to businesses with less than 500 employees, we want to give you money to cover wages, utilities, rents, mortgage interest, debt, health benefit payments that you make like premiums. We want to give you that money. And then during this period, this 8-week period from the time you take it and 8 weeks later, this way we will forgive the loan if you use it for the intended purposes, which is for wages, utilities, rent, mortgage interest, debt, health benefits, and premiums. And so it is a loan, but we will forgive it. However, to forgive it, you have to use 75% of this money we give you for payroll costs, which are wages. So this is where there has been an issue, and this is where we need some plugging up, and this is where the next amount of the loan funding that comes through Congress that they're debating about will come in to change that 75%. The reason the 75% doesn't make sense is because you have to take it into consideration with the unemployment benefits as well. So if we, on one hand, are providing taxpayers these rich benefits, depending on what state they're in, where we're adding $600 per week to the state benefit and extending the period of unemployment for 13 weeks, an employee is going to say, who's been furloughed or laid off, in order for the PPP program to work, you get the loan, you're supposed to hire all those people back. Well, what if those people don't want to come back because they're better off on the unemployment compensation program, right? And that's what's happened. You have some of these small businesses who received the loan, and now the people don't want to come back, and there's this big issue. Meanwhile, the business owner has the loan in its hands and can't get it forgiven because it can't get the employees back so that it can use 75% of those loan proceeds to pay for wages and payroll costs. So there's been this big, huge problem. But that's not the only problem. The other problem is that the loan program was meant for these small businesses with less than 500 employees. But what happened is the banks went to their best businesses, called them and said, we've got some money under this legislation we can give you. And sometimes these places had less than 500 employees per location, which is allowable in the legislation. So you could have these huge companies getting loans that have way more than 500 total employees getting these loans, and that's what happened. And so now the Department of Treasury has gone back and has asked some of these companies to give the money back, and they're working on trying to get that done. Because what happened is the money was depleted in the first round before the small business owner who the money was intended for got anything. And so they did the second round of funding, and in the second round of funding, which most of it is depleted now, they saw the same thing happening. So those are the two issues. On the one hand, you've got this loan program that will keep people employed, people who were laid off initially before the legislation was put into place, would be hired back. Even if they weren't working but were staying home, they would still get their wage, kept people stimulating the economy still, they're still getting their money, and then when the economy opened up, they would be back to work, just press the on button, and everything would be okay. The problem is we caused an issue with the unemployment compensation benefits being too robust where people don't want to come back to work, and we also caused the issue with giving the money to the wrong people, so there's a lot of businesses out there who didn't get the money. So those are the issues that you will see Congress fighting about fixing. Now, let's go back to the 75% of payroll. This is a ridiculous number. Somebody arbitrarily used it when they were building the legislation, and we need to give them a little bit of leeway. This was difficult to do last minute, as any emergency legislation is, to try to figure and plug all the holes and figure out what all of this means. But this 75% is egregious because payroll doesn't necessarily amount to 75% of what they need. So for small businesses, not the large ones, but for the smaller ones. So that hopefully will be lowered in the next round of legislation. The loan interest on the forgiven amount, so you're going to have to pay, even though this amount will be forgiven, usually they'll forgive it within 2 years. The loan term is for 2 years, but they're going to defer the loan interest, which is a 1% loan interest, for 6 months. And then in 6 months, you start paying 1% on that loan, and then in 2 years, the loan is over with. And they expect that the loan will be forgiven within 2 years. Again, we'll have to see what the legislation says when that 75% threshold goes down for these people who already have gotten some funds, and also how they will reconcile what happened with employees not wanting to come back to work. So that's the PPP loan. It's a loan. It's going to be forgiven if you meet the 75% of it being used for payroll. If you don't meet it, it won't be forgiven, and then you got to pay this loan back, and it's a low 1% interest rate. There's another loan program which was already offered by SBA, the Small Business Association, under their Emergency Economic Injury Disaster Loan Program. That's been kind of folded into this legislation as well, but it's already been in existence prior. It's called the EIDL, the Emergency Economic Injury Disaster Loan. That's what that stands for. you can get a cash advance. If you apply for an emergency and idle loan, they will give you up to a $10,000 cash advance. You don't have to pay the cash advance back. This was a big part of this program. You can receive that $10,000 cash advance within 3 days of applying for an idle loan, which is separate from the PPP loan under this program. Now, a lot of small businesses already were aware of this SBA idle loan program before the PPP came out through this legislation. So a lot of people immediately from past experience applied for this idle loan. And they also applied for that $10,000 cash advance. Many insurance advisory firms that I spoke with had received their $10,000 cash check, and they were happy about it. If you ended up applying for the idle loan and you got rejected, it's okay. You didn't have to pay back the cash advance anyway. That's why they automatically sent you that cash advance in 3 days. Now, if you applied for a PPP loan when the legislation passed, as well as waiting for that idle loan when you got your $10,000 cash advance, then you would offset any PPP loan the bank would have given you under the program by the offset the forgiveness of that loan by the $10,000 cash advance or whatever portion you got in a cash advance. You would offset the PPP loan. You wouldn't have to pay it back under the idle loan program. You would simply offset the forgiveness of the PPP loan by that $10,000 cash you received from the idle loan. Now, the key purpose of the cash is for paying rent, mortgage, debt payments, paid sick leave, maintaining payroll, all those things. Now, after April 3rd, you can't get both a PPP and an idle loan. You can only get one, but there was a window of time where you could apply to both, right? Because there was that window where we didn't quite get the PPP in place yet, and then all these provisions came. They were going to allow you to have both loans, and they said that if you eventually got your idle loan with your cash advance and you got the PPP in that period by April 3rd, then you could just refinance your PPP loan if the idle loan money was used for rent, mortgage, interest, debt, etc. If the idle loan was used for something else, you could keep the idle loan and use the PPP loan for the, wages, utilities, rents, mortgage, interest, etc. But now you can only get one of those. They may change that, I don't know, in the following legislation, but typically you can only get one of the two loans available. Now, why would you get an idle loan over a PPP loan? Well, you get an idle loan for two reasons. One, you get that cash advance, even though you have to pay interest and it's not forgivable, but you would get that cash advance that doesn't have to be paid back. And if you couldn't get a PPP loan, or the bank just ran out of money and gave it to everybody else, then your only choice would be to just get the idle loan. So that's why you would get it. But you really want to try and be strategic about this and get the PPP loan if you can. Again, the idle loan is not forgiven. That loan, if you get it, you have to pay the interest on it and you have to pay it back. So that is how the loan programs work. One thing that's important to note is that I didn't mention is under the unemployment compensation, there was they are allowing gig workers and part-time and small business owners, sole proprietors to get unemployment compensation, which is unprecedented. That never happened in the past. So that's one thing. Now I bring this up here because what you can bring up to clients is that you have to really think about if you really want to take your unemployment compensation benefit over going back to work. Because if you got voluntary, if you got benefits from your employer, even though the pay on the unemployment compensation is richer, you are not going to get those benefits if you go on unemployment compensation. So it may make sense to say, you know what, I'm going to go back to my employer to get the benefits, or I'm going to go and voluntarily furlough, let's say your employer has that option for you, so that I can at least get my benefits. Because when you're furloughed, the employer may allow you to get your health benefits, and you may say that's much better than going on unemployment and paying for COBRA. So you've got to really think about, from the taxpayer perspective, when the employer offers an opportunity like furloughing or a reduction in pay, you know, look at that, reconcile, what do I get in benefits versus what do I get in income? What's more important at this stage? What should I do? So those are some things to think about. Now, more relief for businesses. An employer can get a refund of the FICA tax paid. Remember, I told you in a minute we would talk about the legislation that requires that sick and family leave be available to people who either have the virus or have a family member with the virus. Well, that's going to be funded by FICA tax paid. Employers have to pay their FICA tax every quarter. So an employer at the end of March paid for the first quarter. So what the legislation says is, listen, we told you you have to pay sick and family leave, and these are the rules. So we're going to allow you to get a refund of the FICA tax paid that you already paid. So you will receive 100% credit of what you paid for any sick leave in the amount of the sick leave that you paid out, as well as 67% of a credit based on the family leave amount that you paid out of your FICA tax paid for that quarter. The payments that are made as sick and family leave are not subject to the 6.2% FICA tax, so that, you know, makes it a little bit, alleviates the business a little bit. And there is a timing and cash flow issue for the employer because, you know, the FICA tax was paid at the end of the quarter. Now they got to do sick leave, and then they got to get the refund back in order to pay, you know, and have the cash. And sometimes cash can be tough for some small businesses to pay the sick and family leave. So that is an issue, but we can't do anything about the timing. Just be aware of that. So they're also looking, and we don't know what will happen, about providing a FICA tax refund for the second quarter. The Republicans are not too keen on that, so we need to see what happens with that provision. But that is what the provision is you get a FICA tax refund for that first quarter of FICA tax paid to cover sick and family leave that was mandated under the legislation. The other thing they allow you to do for FICA tax is you get up to a 50% refund in your FICA, okay? You get a credit up to $10,000. That credit is equated to $5,000. So if you're not using it for sick or family leave, you can use it for up to 50% of what you had to, if the business has experienced a decrease in gross receipts of 50% or more for this, compared to the same quarter last year. So that tax credit of $10,000 equates to $5,000 because it's a 50% refund. So let me just summarize that quickly. The employer can get a FICA tax credit that they paid on FICA taxes already to the government to fund sick and family leave or to fund the loss in business up to 50% of receipts compared to last the same quarter last year. So that's another way that they're trying to help businesses who can't get the loans, who are too small to get the loans for whatever reason or not credit worthy enough. The other thing that the first round of legislation provided, and the second round of legislation rather provided, is $25 billion to the airline industry, $4 billion to air cargo companies, and $17 billion to companies who are involved in our national security. So the long and short of it is that the next portion of legislation to be passed will likely have additional stimulus in the form of direct payments, so that $1,200 and $2,400. The Democrats would like to increase that so that everybody would get, again, a single payment of $1,200 and $2,400 plus, instead of the $500 per dependent, it would be $1,200 per dependent, so that instead of what is currently a family of 4 getting $3,400, the Democrats are fighting for, under the HEROES Act, $4,800 for a family of 4. The Republicans absolutely said, no way, we're not doing that. They have no appetite to extend that and no appetite to extend unemployment insurance. But what they do have an appetite for is to plug the holes in the PPP program and to lower that 75% arbitrary number of using the loan to to pay wages. The HEROES Act that was passed by the House is the most expensive economic recovery bill yet. I mean, it's 50% more costly than the CARES Act. And of course, the Republicans absolutely, they are not passing this. This is not going anywhere. But in that bill, and it's not on my slides because this pretty much was recent, there's about $1 trillion in funding for states and local governments. $200 billion is for hazard pay to essential workers, and also to fund testing and tracing programs, which is a big thing that Democrats are fighting for. The stimulus checks, as I mentioned, they want to keep that going, but they would like to add $1,200 for dependents instead of $500. And they want to, it's interesting, the Democrats want to expand past July 30th, the unemployment compensation program where you do the $600 per week, and that was supposed to end on 7/31. They want to expand it to January 1st. So that's something we need to keep an eye on. It's very unlikely that's going to pass, but maybe something in between will. Maybe they'll reconcile something between the PPP loan and the unemployment benefits. So that is, in a nutshell, what is happening. And I think I'm going to open it up for questions.
Hey, Lena, before you open it for questions, can you advance one more slide for me? Yeah, and just talk about, so we've come to the portion where we're going to ask some questions for Lena and Brad. We've got a couple already in the queue. Today at 3 p.m., we have our afternoon session of the Summer Training Camp Series where we'll review the Secure Act and maybe some opportunities that could arise from that. So definitely check that out. Also next week, we're going to focus on premium finance. Same time, Wednesday of next week at 11 a.m. We're going to have a Premium Finance 101. Just review what premium finance is, show some a couple examples, and just kind of a real broad overview of premium finance. And then for the 201 session at 3 p.m., we're going to go a little bit deeper in premium finance, and we'll also have the ability to have a lender on there that will kind of give you a perspective from the premium finance transaction and kind of what they look for. So a good perspective, not only from the insurance carrier, but we'll also get the perspective from the lender side. So a really neat opportunity. So check both those two out. You should be getting an email to register for those tomorrow. And register for those because if you're unable to, well, one, when you register, it puts a notification in there. So if you're able to join us live, that's the optimal situation. But as a registrant, if you're unable to join, we also send out the link of the recording and the supporting materials to that registration list that didn't attend. So definitely get registered for it. Hopefully you can join us. And if you're not, we'll make sure you get a copy of that recording and kind of a summary of what we reviewed. So with that, if you have any questions for Lena or Brad, please use that Q&A feature and we'll be able to ask them those questions. So Lena, we did get one in. The UI payment is taxable, but is the $600 additional payment taxable by the IRS and or the state?
Yes, it is. Absolutely.
All right. I saw a couple participants raise their hand. If you can fire your question through there on the Q&A feature, we'll be able to ask that question. We got a second question. What is the qualification for the self-unemployed benefit? Do you know that, Lena?
Meaning, if you're self-employed and you want to qualify for the PPP program or the unemployment? No, what the question is.
Yeah, maybe touch on both.
Yeah, okay. So if you're self-employed, you have an opportunity to get a PPP loan. Now, as I mentioned, there's a lot of issues. Now, the money's running out, so there'll probably be another round, so be aware. What they will do is they will look at what you're, at the same time last year that you're applying for, what you made, and what, and they will base the loan based on that. So the 75% rule for the unemployed, I'm sorry, for the self-employed is going to be based on really, if you don't have, it depends, if you only have you, then it will be based on only what you made. Theoretically, that is how the legislation works. And we created, when we created the quick concept piece that Brad spoke about, we mentioned that you as a self-employed individual still have an option to get a PPP loan to cover, not to cover losses, but just to cover wages, what you would have expected to have gotten based on what you got last year. Not lost sales, but just wages. So, and revenue, basically what you received as, you know, your wage income. And so I don't know how that, in practice, that is working out, but the legislation allows for it. I don't know how banks are looking at that, but the legislation allows for that. In terms of unemployment insurance, I think the question was, can you get it? How do they figure out the benefit? Yes. So what they do is they'll figure out, you're gonna have to talk with the unemployment person, but they will look at what you were making in the past, and they will prorate that for, you know, a certain period of time. And then they will, I don't know technically how they do it, but they will prorate it based on the state's particular program. But you have to be able to apply. What I've heard is self-employed people have applied, depending on the state that they're in, and they have based it on what their income was the prior 6 months. So you're going to have to talk to the state and how they're going to look at it. Do they look at it from January to March? Do they look at it from, you know, the time you applied the 6 months prior? You're going to have to ask them about that. But there is a formula they use to say, in order to help you, this is what we're going to do. We're going to look at, you know, the money that you made in this amount of time, and we're going to compensate you for that plus the $600. The $600 is flat amount that you would get. But you have to qualify first at the state level to get the $600.
We also had one, it's probably just more of a confirmation, but as it currently stands, you're now not allowed to get both the PPP loan and the economic disaster loan, correct? Is that a question, Kyle? Yeah, I just want you to confirm. I mean, I think. Yeah.
So currently the way it's working is, it's possible that you can get an EIDL loan for some disaster that happened that's not related to wages and payroll, and get a PPP loan. It is possible. However, it is unlikely. You should go the route one or the other. It is unlikely because the PPP loan is specifically for wages, covering wages and payroll costs, whereas the EIDL loan, you've got to cover something else that the disaster loan, you know, allows to be covered, whether it's covered under coronavirus stimulus package or under some other disaster. So the reason I say that is it's possible that you could get around the rules and get an EIDL loan for something other than payroll costs, But if you're looking to get coverage for coronavirus issues associated with your business, you can only get one loan, one of the two.
Okay, looks like we have time for maybe a couple more. We did have a comment that a small business owner, one of the agents online is working with, received only $1,000, not the $10K from the EIDL loan. Would that just be the advance, or have you seen anything like that? Where is it up to 10K, or is it a flat 10K where the smaller amount might have been different?
Yeah, you know, they prorate it and figure out what you need. That's all. It's just they figured out you didn't. You know, it's very interesting because a lot of the smaller businesses are able to get the full 10K. I've seen these insurance advisory firms able to get the full 10K. They have 3 people in the office. I don't know if there's something else going on. I think that's a good question, but I do believe that it has to do with, you know, the size of your business, honestly.
Excellent.
Somebody has a question for people who are earning both W-2 income. Can you read that? I can't see that. If the job asks them to stay at home.
I was trying to paraphrase it. So. Okay, so it sounds like if they're earning if they're earning W-2 income, but the job asks them to stay home without pay, so they're not laying them off, but just kind of just pending, would they qualify for some of those benefits?
So no, they're likely not going to qualify for, they will qualify if they're furloughed and they're not getting paid and they need to just go home, but they're not laying off because they want to turn the lights back on when everything calms down, then they will, well, it just depends. If the company has benefits, health insurance benefits, they will likely receive those health benefits or whatever the other benefits that the company offers, and that can be much more attractive than you just cutting the cord and saying, you know, I'm so mad, I'm going on unemployment right now, I don't know how long this thing is going to last, I'm going to get my check there. Because if you do that and you get health insurance through the employer, then you're going to be on COBRA. So that's a very good question. You have to think through that, but they do get the benefits, whatever benefits they get. If they're furloughed, they should get those benefits, depending on, you know, if the employer will continue to offer those benefits. If the employer doesn't offer those benefits, then there has to be a decision to be made. How long is this going to happen? Am I going to be out for? I don't get benefits from the employer. I could get these robust benefits from my state with the federal kicker, you know, so maybe I should go on unemployment compensation. So you're going to have to make some decisions about that. But I think that's on an individual basis.
There was a lot to unpack with that one. And I think the last question we'll end on, Lena, is, you know, as someone that maybe doesn't have employees but might be having some hardship, you know, this is pretty generic, but, you know, what do you think would be the best approach as someone who's just, you know, an advisor, an agent, doesn't have employees type of situation?
So I would apply for the PPP loan, and I've mentioned this to people. I don't know, like go to a community bank, a smaller bank that you've done business with. They were allocated in the last round 3.5. They were allocated a certain amount of money to get to the smaller folk. So, and also people are more remote, that they don't get full access in the larger regional banks. So I would go and I would apply, and I would look at what you made this year, what you made this past quarter last year, and see if you could get a PPP loan that could be forgivable. Definitely, at a minimum.
Excellent. Well, I appreciate the questions. Lots of good feedback and interaction. I want to thank Brad and Lena for their time today. As Brad mentioned at the beginning of the call, check out the marketing piece our advanced sales team put together in reaction to the stimulus package. For a lot of the information that we covered today is on there. We will be getting this recording out to you as fast as we can. And if you have the ability, join us at 3 p.m. Central today. We'll dive into the Secure Act. Well, again, we appreciate your partnership. We appreciate your business, and thank you. Have a great day.
Thank you.